Think about the last time you looked at a payslip, not the number at the bottom, the line above it, the one that takes its cut before the money ever touches your hands. You probably didn't give it a second thought. It's just there, the way weather is there. Now here's something that might genuinely surprise you. For 733 years, from the Norman conquest in 1066 to the last winter of the 18th century, there was no income tax in England or in Britain, not a temporary one, not a small one, none. And yet somehow the Royal Navy was built. Wars were fought on 4 continents. Canals were dug, cities were paved, a national debt was invented, and a small wet island assembled the largest empire the world had ever seen, all without a single government official ever asking a working person what they earned. So how did that actually work? Who paid for all of it? What do you tax if you can't tax a person's wages? And what happened in 1799 that broke a rule the English had defended for 7 centuries? Because what changed that January didn't just add a line to a ledger. It rewired the relationship between a British citizen and the state, permanently Boers, and it was sold to the country as a temporary emergency measure. Here's the strange part. Technically, it still is. The answer runs through bricked-up windows you can still see in British walls today, a tax on the powder in men's wigs, a sitting prime minister standing in a field at dawn with a loaded pistol, a public bonfire of government records, and a promise that Parliament has quietly had to renew every single year for the last 2 centuries. So let me take you back to the beginning. Let's get one thing straight first, because a good story deserves an honest foundation. When I say there was no income tax, I don't mean English kings never taxed anyone. Of course they did. Through customs on wool, through subsidies assessed on a person's movable goods, and through the notorious poll taxes of 1377 to 1381 that helped ignite the peasants' revolt. There were even experiments under Henry VI in 1435 and 1450 that look strikingly like graduated income taxes to modern eyes. Verify, but every one of those was a one-off, a war measure, voted, collected badly, evaded enthusiastically, abandoned. No annual assessment, no permanent machinery, nothing that reached into what an ordinary person earned week to week. The idea that a government had a standing right to know your income would have struck an Englishman in 1690 as something you'd expect from the French, and that comparison is going to matter a great deal. So let's go to 1690, because that's when the money problem becomes impossible to ignore. England had just been through the glorious revolution of 1688. William of Orange was on the throne, and he had brought his personal quarrel with Louis XIV of France along with him. What followed was not a war, it was a condition. Between 1689 and 1815, Britain and France fought 7 separate conflicts, and Britain spent roughly half that period at war. War in the age of gunpowder navies was ruinously expensive. A single ship of the line cost more than a duke's country estate, and the English government's annual revenue at that point was measured in the low millions. It could not possibly pay for the wars it had signed up to fight. So what did they do? They improvised. And what they improvised was, without exaggeration, one of the most consequential financial inventions in modern history. In 1694, a Scottish merchant named William Paterson had a proposal, and Charles Montague, rising fast at the Treasury, had the nerve to push it through. A group of private investors would lend the government £1.2 million, and in exchange be incorporated as a bank with the right to issue notes. The subscription filled in under a fortnight. That bank was the Bank of England. Here's why it mattered. The old way of borrowing was for a king to take a loan and repay it, which kings frequently didn't. The new way was different. The government didn't repay. It serviced. It kept the debt permanently outstanding and paid interest forever. And to guarantee that interest, Parliament pledged a specific tax to each specific loan. The lender wasn't trusting the king's honor anymore. He was trusting an act of Parliament and a stream of duty on beer. The historian John Brewer, in his study of this period, called the result the fiscal military state, a machine for converting taxes into credit and credit into warships. And it worked spectacularly. Britain, with roughly a third of France's population, consistently outspent France on war because Britain could borrow at half the interest rate. But a machine like that needs fuel. Reliable, predictable, year-after-year fuel. And that fuel came from 3 sources. The first was customs, duties charged on goods as they came into the country through the ports. Tea, sugar, tobacco, wine, silk, straightforward to collect because ships have to dock somewhere. The second was the land tax, established in its modern form in 1692. In wartime it ran at 4 shillings in the pound, 20% on the assessed annual value of land. Sounds severe. It wasn't, because the assessments were frozen almost immediately, so by the 1780s the gentry were paying 20% of what their estates had been worth a century earlier. Funny how that happens. And the third, the big one, the workhorse, was the excise. Excise is a word that's fallen out of everyday use, so here's the plain version. A tax on a good at the moment it's made inside the country, rather than at the border. Beer, salt, soap, candles, leather, glass, paper, malt, starch. If it was made in Britain in any quantity, an excise officer was probably measuring it. And that word measuring is the whole story. The excise office employed officers called gaugers, and a gauger's job was to walk into a brewery with a dipping rod, measure the depth of beer in the vat, and calculate the duty owed. They rode circuits, they kept books, they were tested on mathematics before appointment. Brewer found the excise had grown into the largest civilian bureaucracy in the country, a professional civil service decades before Britain had anything else that looked like one. Now here's the critical detail most people overlook. That entire system was designed deliberately, consciously, to avoid asking you anything about yourself. And the reason is a tax you've probably never heard of. In 1662, Charles II's government introduced the Hearth Tax. 2 shillings a year on every fireplace in your house. The logic was elegant. Rich people have more fireplaces. But to count fireplaces, the collector had to come inside. And so twice a year, a man the public nicknamed the Chimney Man walked through your front door, into your kitchen, past your family, counting. The country hated it with a passion that's hard to overstate. People bricked up hearths before inspection day and unbricked them after. Some knocked through a wall to share a neighbor's chimney. There were riots and collectors beaten in the street. And in 1689, when William and Mary needed the goodwill of the nation, one of the first things Parliament did was repeal it, describing it in the Repealing Act itself as a badge of slavery upon the whole people. Verify exact wording. Think about that phrase, not a heavy burden, a badge of slavery. Because a man's home was the one place the state was not supposed to go. So in 1696, when the government needed to replace the lost revenue, it came back with something clever, a tax on windows. Same principle, bigger house, more windows, more tax, but with one enormous difference. You can count windows from the street. The collector never had to knock. He stood on the pavement, looked up, wrote a number in his book, and walked on. And the country accepted it, more or less, for 150 years. Not because it was fair, it wasn't, and poor families in subdivided tenements suffered badly under it, but because it respected the line. It taxed the outside of your life instead of the inside, and people responded exactly as you'd expect. They bricked up their windows. Walk around a Georgian terrace in Bath or Edinburgh or Dublin today and look up, and you'll see them. Window-shaped panels of flat brick where glass used to be, or was never installed at all. Remember those. We're going to come back to them. Quick note, because I'd rather be accurate than quotable. You'll often hear that the phrase daylight robbery comes from the window tax. There's no good evidence for that. It seems to have been attached to the tax long after the fact. The bricked-up windows are real, the etymology isn't, so there it is. The British system, fully assembled by 1700. Borrow enormous sums, service them forever, fund the interest with duties on ships, land and beer, a state that raised more money per head than any rival in Europe without ever asking a citizen a single question about himself. And for 100 years it worked, until a prime minister at the absolute height of his power decided to push it just a little bit further. Sir Robert Walpole is usually called Britain's first prime minister, and by 1733 he'd been running the country for 12 years. A big, coarse, brilliant Norfolk squire who understood money better than anyone in Parliament, and he had a genuinely sensible idea. The problem was smuggling. Tobacco and wine paid customs duty at the ports, and a great deal of it never paid a penny because the coast of England is long and customs officers are few. Walpole's fix was to move both goods from customs to excise. They'd land duty-free, sit in bonded warehouses, and pay only when taken out for sale. Smuggling would collapse, revenue would rise, and with the extra money, Walpole hinted, he might abolish the land tax altogether. He was offering the landed gentry a tax cut. It should have been the easiest sell of his career. The backlash was immediate and vicious. Moving something to excise meant excise officers, and they had powers of entry and search that customs men didn't, with cases judged not by juries but by commissioners. The opposition press ran with it and never let go. Pamphlets, ballads, prints. The slogan was, "No slavery, no excise, no wooden shoes." Wooden shoes meant French peasants, poverty, absolute monarchy, the thing the English had just fought a revolution to avoid. Effigies of Walpole were burned in towns that had never seen an excise officer in their lives. Crowds packed the approaches to Parliament. When he withdrew the bill in April 1733, he had to be escorted out through a hostile mob, and by some accounts was jostled on his way to his coach. The historian Paul Langford wrote a whole book about this episode, and his point is worth borrowing. The excise crisis wasn't about tobacco. It was about the fear that a competent tax bureaucracy would eventually become an unlimited one. Walpole survived, but never touched excise again, and neither did anyone else for 2 generations. The lesson the British state absorbed was blunt. You can tax the thing. You must not tax the person. You can hear that lesson calcify into culture. When Samuel Johnson published his great dictionary in 1755, he defined excise as a hateful tax, judged not by ordinary courts but by hirelings of the men who collect it. He got in trouble for it. He didn't change it, and that would have been the end of the story. A settled constitutional line, a nation happily taxing its own beer forever, except for one thing. Britain kept winning wars, and winning wars turned out to be catastrophically expensive. The 7 Years' War, from 1756 to 1763, was the first genuinely global conflict, fought in Europe, North America, the Caribbean, West Africa, and India at once. Britain won it comprehensively, and the bill roughly doubled the national debt, pushing it to around £133 million. Interest payments alone were now swallowing a huge share of annual revenue. So George Grenville's government asked a reasonable question. The war had been fought substantially to defend the American colonies, and the colonists paid a tiny fraction per head of what an Englishman paid. Why shouldn't they contribute? And that's where the trouble began. The Stamp Act of 1765 required an official stamp, a paid duty, on printed paper in the colonies. Newspapers, legal documents, ships' papers, licenses, even playing cards. From a treasury desk in London, it looked modest and familiar. It was, after all, exactly the kind of tax Britons at home had been paying since 1694. In America, it landed like an occupation. On the morning of the 14th of August, 1765, Bostonians walking up Newbury Street found an effigy hanging from the branches of a great elm. It was Andrew Oliver, the man appointed to distribute the stamps, dressed in a suit with a boot beside him and a small devil climbing out of it. A visual pun on the Earl of Bute. The crowd left it hanging all day. That evening they cut it down, carried it through the streets, beheaded it, burned the building Oliver was said to be fitting out as a stamp office, and then gutted his house. The next morning, Andrew Oliver resigned. Not one sheet of stamped paper was ever successfully sold in Massachusetts. That elm became known as the Liberty Tree. Parliament repealed the Stamp Act within a year, but the argument never ended, and 18 years later, Britain had lost 13 colonies and gained roughly another £100 million of debt for the privilege. Sit with that for a second, because it's the hinge of the whole story. Britain went to war with its own colonies and lost them, substantially because it could not bring itself to tax its own citizens any harder. The constitutional line held, the consequences went overseas, but the line was about to face a pressure test that no amount of principle could survive. In February 1793, revolutionary France declared war on Britain. The man who had to pay for it was William Pitt the Younger, Chancellor of the Exchequer at 23, Prime Minister at 24, and by 1793 a decade into the job. Pitt was no warmonger and no spender. He was a fiscal conservative who'd spent his career paying down debt, and he confidently expected the war to be short. It lasted, with one brief interruption, for 22 years. Costs exploded on a scale that had no precedent. Pitt did what British governments always did. He borrowed, and borrowed. By 1797, the strain was so severe that the Bank of England ran dangerously low on gold and the government suspended cash payments, meaning its paper notes could no longer be exchanged for coin on demand. The satirist James Gilray drew the moment as an elderly woman in a dress made of banknotes, being assaulted by Pitt as he grabbed at the gold in her pocket. He called her the Old Lady of Threadneedle Street. The nickname stuck. So Pitt needed revenue that didn't come from borrowing, and still bound by the old rule, tax the thing, never the person, he went looking for things. What followed is one of the strangest sequences in British fiscal history, and it's genuinely funny right up until the moment it isn't. In 1795, he taxed hair powder. If you wanted to wear the fashionable white powdered hair of the 18th century, you now bought an annual certificate costing a guinea. The Treasury projected a healthy sum, because every gentleman in Britain powdered his hair. They did not account for fashion. Young men across the country simply stopped. They cropped their hair short in a deliberate, faintly political style, a haircut as a statement, and the powdered wig, which had defined European appearance for a century, died within about a decade. The powder trade collapsed. The revenue withered. Pitt had invented a tax that destroyed its own base. In 1796, he taxed dogs. In 1797, clocks and watches. A few shillings on a clock, more on a gold watch. Verify rates. The results were immediate and terrible. People hid their watches, sold them, or stopped buying, and the skilled clockmaking trades of Clerkenwell and Lancashire went into freefall almost overnight. Parliament repealed it within about 9 months. Here's the detail that matters most for our story. Every one of these taxes was a proxy. Pitt wasn't really taxing wigs or watches. He was trying to guess at wealth by taxing the objects wealthy people owned, because he still wasn't allowed to ask them what they earned. And in 1798, he pushed the method as far as it could physically go. The triple assessment took the existing taxes on windows, horses, carriages, and servants and multiplied them on a sliding scale according to what you'd paid the year before. In effect, we don't know your income, but we know how many footmen you keep, so we'll extrapolate. It was ingenious. It also failed. Pitt hoped for something like £8 million and collected roughly 4.5. The country responded by dismissing servants, selling carriage horses, and, you'll enjoy this, bricking up more windows. The proxies were exhausted, and the country was closer to the edge than it had been in living memory. In 1797, the Royal Navy had mutinied at Spithead and then the Nore. Ireland was weeks from open rebellion. Invasion barges were being counted across the Channel. Pitt himself was ill, exhausted and drinking heavily. Which brings us to the emotional center of this entire story, a field outside London on a Sunday afternoon. On the 25th of May, 1798, the Commons debated an emergency bill to raise more men for the Navy. George Tierney, a sharp opposition Whig leading the Foxhuts, while Charles James Fox boycotted Parliament, objected to the bill being rushed through without proper consideration. A procedural point, an entirely normal one. Pitt lost his temper and said Tierney's objection arose from a desire to obstruct the defense of the country. In the 18th century, that was not a political jab. That was an accusation of something close to treason, aimed at a man's personal honor. Tierney appealed to the Speaker. The Speaker asked Pitt to explain himself. Pitt refused to withdraw a single word. The next day, a challenge arrived. So on Whitsunday, the 27th of May, 1798, 4 men arrived at Putney Heath in hackney carriages. The meeting was meant to be private. Word had leaked and a small crowd was already gathering. The Prime Minister of Great Britain, in the middle of a war for national survival, took his place at 12 paces from an opposition MP and raised a pistol. Both men fired. Both missed. They fired a second time, and Pitt discharged his shot into the air, and the seconds declared honor satisfied. Nobody was hurt. It was observed at the time, with a certain amount of relish, that the contest had been rather unequal, since Pitt was famously thin and Tierney was famously not. That night, Pitt wrote to his mother to reassure her before she read it in the papers, telling her the business had ended without anything unpleasant to either party. His friend William Wilberforce was appalled, less by the duel than by the fact that it happened on a Sunday, and gave notice of a Commons motion against dueling, which he withdrew only when Pitt made it clear it would bring down the government. Look at what that scene actually represents. The head of the British government stood in a field with a loaded weapon, over an argument about how to raise men and money for a war he could no longer afford. The careful 100-year-old system of taxing ships and windows and beer had run out of road, and everyone in Westminster knew it. 7 months later, Pitt stood up in a crowded House of Commons and proposed the one thing no English government had ever dared to do. On the 3rd of December, 1798, Pitt introduced his budget. The proposal was simple to state and revolutionary to imagine. A tax not on your windows, not on your horses, not on the powder in your hair, but on your income, from whatever source it came. The act received royal assent on the 9th of January, 1799. Let's slow down because the details are the whole point. Nothing was owed below £60 a year, somewhere around £6,000 or £7,000 today, which excluded the large majority of the population. Above £60 the rate began at 2 old pence in the pound, 1/120th, under 1%, and climbed on a graduated scale. At £200 and above it reached the full 2 shillings in the pound, 10%. That graduation is worth pausing on. Pitt built a progressive tax. The more you earned, the higher the proportion you paid, an idea so normal now that it's hard to feel how strange it was. Payment came in 6 equal installments from June 1799. But the money wasn't what horrified people. It was the paperwork, because the system required a declaration. You had to state your total income from every source and submit it to a body of general commissioners, who were local men, landowners, neighbors, people you saw at church. For a merchant, that disclosed your trading margins, the closest thing you had to a business secret. For a gentleman, it disclosed your mortgages and your debts, a family secret of a more painful kind. The word used again and again in the pamphlets is inquisition, not burden, inquisition. It was the Hearth Tax argument of 1689, alive and shouting 110 years later, and Britain responded to the greatest constitutional innovation in its fiscal history the way Britain always responded. It lied. Pitt had estimated the total national income at around £100 million. At 10% he expected around 10 million. He quietly revised that down to 7.5. What actually came in the first year, was a little over £6 million. Translate that. The government asked an entire country to declare what it earned, and the answer that came back was short by something close to 40%. Not through organized resistance. Nobody burned effigies this time. Just millions of individually rational decisions to round downwards. In March 1802, Britain and France signed the Peace of Amiens. Pitt had already resigned, and his successor Henry Addington repealed the income tax to genuine public rejoicing. The emergency was over. The promise had been kept. Britain went back to normal. Normal lasted 14 months. War resumed in May 1803 and Addington brought the tax back. But here's the critical detail most people overlook, because it's the single most important thing in this entire video and almost nobody knows his name for it. Addington redesigned the machine. He split income into 5 schedules, A to E, by where it came from: land, farming profits, government annuities, trades and professions, and salaries. And wherever possible, he collected the tax not from the person receiving the money but from the person paying it out. The tenant deducted it from the rent before handing it to the landlord. The bank deducted it from dividends. The paymaster deducted it before the salary was issued. Deduction at source. You were never asked to confess anything, because the money simply arrived already cut. The results were extraordinary. Addington's rate was half of Pitt's, 1 shilling in the pound instead of 2, and yet, according to the Association of Taxation Technicians' History of the Tax, revenue rose by about 50%, and the number of taxpayers doubled. Pitt had criticized the changes from opposition. On returning to office in 1804, he adopted them essentially unchanged. The rate climbed back to 10% by 1806, and the tax funded Britain through Trafalgar, the Peninsular War, and Waterloo. When the guns finally stopped in 1815, the national debt stood at £834 million, roughly double everything the British economy produced in a year. Verify ratio. Nicholas Van Sittart, the Chancellor of the Exchequer, argued the tax had to stay, at least at half rate, because there was no other way to service that debt. In strict arithmetic, he was right. He also told the Commons it pressed on the rich more than the poor and was the least oppressive tax ever devised. The country disagreed, at volume. What followed was one of the largest petitioning campaigns Britain had ever seen. Hundreds of petitions from towns, trades, and counties flooding into Westminster in the early months of 1816. The historian Henry Miller, writing for Parliament's own history of petitioning, treats it as a landmark in organized public pressure on legislation. On the 18th of March, 1816, the Commons divided. The government lost 238 to 201. Lord Castlereagh wrote to the Prince Regent that same day to report the defeat, noting that the Treasury's own count that morning had them winning by about 40 votes, and that the shortfall came from friends of the government who had either gone home or voted against. The chamber reportedly erupted. The property tax was dead. And then came the bonfire. Parliament ordered that every document connected with the income tax be destroyed. The returns, the assessments, the declarations, the whole intrusive paper record of what Britons had earned. And they were destroyed, publicly, as a piece of political theater designed to prove the thing was gone for good. Except it wasn't gone. The King's Remembrancer, an ancient office of the Exchequer, one of the oldest continuously held posts in English government, had already made duplicates. And kept them. So here's the balanced verdict, and it matters. The opponents of the income tax were right about almost everything they feared. It was intrusive. It did require the state to know things about you it had never known before. And temporary was, in every practical sense, a fiction. But they were wrong about the one thing they were most confident of, that burning the paperwork would uninvent the idea. Because the idea wasn't in the paper. It was in the schedules, in the deduction at source, in the administrative knowledge of how to do it. And in the simple, unforgettable fact that when Britain had truly needed money, only one tax had actually delivered. That knowledge sat quietly for 26 years. Then, in 1842, a conservative prime minister who had campaigned against income tax at the previous general election found himself staring at a deficit he couldn't close. Robert Peel wanted to strip tariffs off hundreds of imported goods to bring down the cost of living, and he needed a bridge to cover the lost revenue. So he brought back the income tax, 7 pence in the pound, just under 3%, on incomes above £150, for 3 years only. That was in 1842. It has never lapsed since. In 1853, William Gladstone delivered a budget speech of nearly 5 hours, laying out a detailed schedule for phasing the income tax out of existence by 1860. Verify duration. The Crimean War broke out the following year, and the rate doubled instead. In 1874, Gladstone fought a general election on a promise to abolish it. He lost. Nobody has seriously tried since. And in 1944, the British state finally solved the problem that had defeated it for 250 years. Pay as you earn, deducting the tax from your wages before you ever saw them. Look at what that actually is. It's the window tax logic, perfected, a way to assess people without knocking on the door and to collect without making them watch themselves pay. The state finally got the inside of your life and agreed in exchange never to make you feel it. Today, income tax raises around £302 billion a year, roughly a quarter of everything the British state collects from something like 35 million taxpayers. Verify current figures. It funds the health service, the pensions, the schools, the army, all of it. Pitt's emergency wartime measure is now the foundation of the entire British state, and it is still legally temporary. Income tax expires every single year and Parliament has to reimpose it annually in the Finance Act. Every spring, that promise from 1799 gets renewed for one more year, 2 centuries of one more year. When you zoom out and look at the whole arc, the story isn't really about money. Every fight in it, the Chimney Man in 1662, the Excise Mob in 1733, the Liberty Tree in 1765, the Declaration Forms in 1799, the bonfire in 1816d was a fight about the same question. Not how much the state may take, how much it is allowed to know. For 7 centuries, the English answer was as little as possible. Tax my beer, my windows, my ships. Do not ask me what I am worth. The price of that answer was a government that could build a navy but not a hospital, funded by duties on salt and soap and candles that fell hardest on the poorest households in the country. The world before 1799 was not a lost paradise. It was a world with no pensions, no schools worth the name, no safety net of any kind, and a tax system that quietly took a larger share from a laborer's salt than from a duke's estate. What came after took more from you, knew more about you, and did vastly more for you. Whether that trade was a good one depends entirely on what you value. So the next time you pass an old terrace and notice a window that isn't a window, just a flat panel of brick where the glass should be, you're looking at the fossil of the older bargain. A house rearranged around the principle that the government could look but could not come in. And the next time you glance at that line on your payslip, you're looking at what replaced it, a state that doesn't need to look at your house at all because it already knows. The question underneath it has never actually been settled. It's just been renewed quietly every year for 227 years. Who is entitled to know what you earn and what do they owe you in return for knowing it? If this story shifted the way you think about the systems you live inside, subscribe. We go deep on the hidden systems that shape your world. The institutions, laws, and quiet compromises most people walk past every day without noticing. This channel is for people who'd rather understand how the machinery was built than argue about the paint. And there's another video coming soon that you will not want to miss. Britain had no police force until 1829, so who was actually enforcing the law?